everybody, and welcome to Masters of Real Estate. My name is Mathew Owens. I am a California licensed CPA and full-time real estate investor, and I'm here to talk to you about passive versus active investing and which strategy you should be deploying when you are investing in real estate. Do you have the time and bandwidth to be able to be an active investor, or do you think you should be better fit with the passive investing side to build that financial freedom and that cash flow stream? Both can have their distinct advantages and disadvantages, but it's important to understand which one is right for you personally and which one will fit with the lifestyle that you want to build. Remember, at the end of the day, the goal here is to create a passive income stream that you can retire off of, right? And be able to consistently make money to replace your job or replace your active income so that you can be financially free and have that time freedom that everybody is pushing for. And that's usually why people get involved in active investing in the first place. They think in their minds, hey, I have to go and fix and flip. I have to go be active to create big windfalls of capital so then I can go take those and use them to live off of and take the excess to invest passively in other opportunities so that you can actually create that passive cash flow stream to retire off of. That's what I thought in the beginning. I thought, hey, I better go flip and flip because I don't have any capital to invest myself in the very beginning. And wow, was I completely wrong. There are ways to invest passively without necessarily utilizing your own capital with the right deal structures, with the right strategies in place to hold long-term and develop those passive cash flow streams along the way and with your active strategies that you're deploying, okay? So some of the things that you should be considering, right, when you're deciding, should I be active, should I be passive? One, do you have the time freedom to be able to do this in the first place, right? Do you have the freedom of the time to come in and manage rehabs actively manage your tenants and your property managers and your contractors and your different team members involved? Deal with a marketing plan to find discounted properties. Do you have the financing in place as well where you can personally qualify for that financing? You have the net worth capabilities on those larger deals to take them down. Usually when you're dealing with the single family market or smaller projects, you might be fine with getting traditional Fannie Mae, Freddie Mac financing or what's called a debt service coverage ratio financing, which is usually financing on your rental policies for a business purpose loan. So you can go get that in place. But if you're dealing with a large multifamily type deal, you might need a net worth requirement. You might need, to be able to have that experience dealing with large multifamily projects in the past to even be able to qualify for the financing in itself. So it depends on the asset strategies that you're going after in the first place. One of the other big considerations is, do you have the capital to take down these deals yourself, being an active operator over and over again? Normally, it's going to take private capital along with your own capital to put in to be able to do those deals. Now, you can raise other private equity, which is more of an active job, right? You're going to consistently be raising capital for your deals over here so that you have enough bandwidth. If you don't personally have the capital, you're going to have to put in the work to do that. Now, same thing with the bigger types of deals. You may not have all the capital to take those down. Most likely you will not. And so if you're going through and having to raise millions of dollars for these large multifamily projects, you need to learn the strategies on how to raise capital that way as well if you don't have the bandwidth. Many times investors have the capital for those smaller deals or those active operation deals, but when you're dealing with the bigger stuff, you better be able to find that capital or have those capital sources so that you can be an active investor and be able to put those deals together. Now, some of the other big considerations are if you are a passive investor, you probably don't need to qualify for that financing yourself. You probably don't need to have those net worth requirements yourself. You are not even necessarily qualifying for the financing. You're not even obligated under any kind of personal guarantee on the financing. Typically, when you're investing passively, you are only at risk for the money you put in. If you are an active operator, on the other hand, you may be at risk for not only the money you put in, but also the debt that's in place. If the lender takes a haircut on that debt or loses money because that deal doesn't work out for whatever reason, usually you as the operator has a personal guarantee or something along those lines to make sure that that lender doesn't lose money. So you could be at risk for a much higher amount if you are an active operator involved versus just a passive limited partner involved. Now, some of the cons with being able to invest passively in these types of situations is you got to be comfortable with giving up the control over that deal to an operator that already knows what they're doing, right? An operator that has experience in that space. Some investors just can't get over that control, right? They really aren't going to feel comfortable unless they buy the deal themselves and they own it themselves and have complete decision-making ability over that particular asset. And there is definitely value in doing that, not having all these partners involved and things like that in your particular deal. Now, on the other side of things, that other operator that has all this experience has already gone through their learning curve. So they're probably better than you at managing assets unless you have a ton of experience under your belt to be able to take deals down and be consistently profitable with regard to investing in direct assets yourself. Now, you're going to go through that learning curve one way, shape, or form. Whether you are, if you're investing yourself in the beginning, you're going to have losses. You're going to probably not make as much money as you thought you were going to make because you may not know how to manage risk on contractors correctly, how to manage risk on your teams, or how to manage expectations on those teams and really run a business. If you have a W-2 and you are working for somebody else and maybe you're really, really intelligent at that specific item. I know I was really good as a CPA, but coming into business in the very beginning in 2006 to go into real estate, I didn't know crap about running a business. And that is really what you need to become an expert at when you are investing in real estate, when you're being an active operator. You got to manage teams, right? Managers, contractors, realtors, bird dogs, marketing systems, contact management systems, all different types of things that you have to master, including human resources, managing employees. All of that stuff goes into an active operation. So you need to determine, do you want that? Do you really want to actually go out and invest actively and do that for that gain that you are going to get for doing that? You will get paid long-term in knowledge and monetary value by going out and learning that, going through the learning curve, taking your punches in the face, losing money, going through and problem solving. That's what you're getting paid for, is the problem solving associated with investing in active management. Now over here, when you're investing passively, you're actually going out and that operator is getting paid for that active work. So when you're looking at what your return on investment is, when you're investing actively versus passively, you really got to put a value to your labor. What is your labor worth? Is it worth 2 to 3 to 4 or 5 even percent on your money to not have to do any work? Can you scale much more effectively if you're investing passively and where you already have an active income job over here and you really don't want to go and invest in more active deals that you can create more chunks of capital with to invest passively? You may want to just start investing passively right away and use your other job and your other income sources to be able to get those chunks of capital and save to continue to invest. You can also utilize other people's money, whether you are passive or active. At the same time, other people's money, when you're utilizing other people's money, you have to know how to mitigate risk to a whole nother level. You have to know the active operations side so that you can mitigate that risk when you're utilizing other people's money to make money in real estate. So all of these things are key for your long-term success and your vision for your retirement, right? Do you want to be actively managing managers consistently for a long period of time and doing the asset management work and that higher level work consistently long term? Or do you want to get checks every quarter where you're not actually having to do that? You're getting quarterly reports. And keep in mind, you got to do your homework on those operators. Not all operators are created equally. So there is some risk there with regard to passive investing. And so the way I mitigate that risk is I invest small chunks of money with multiple operators in multiple asset classes in multiple markets around the country so that I can diversify that base. Unless I have a really good operator that I know knows their stuff really well in that space, that mitigates the risks, that understands, hey, this is the risk in the overall economy right now. Here's our break-even point. Here's how we do the financial modeling and come up with conservative assumptions. If you have an operator like that, that's when I'll typically go a little bit heavier with them, but I will always take it slow in the beginning and get to know them, get to know their reporting, get to know their communication. Have they dealt with problems and mitigated risk and gotten through those problems in the past? So usually you learn a lot by taking those punches in the face, and you don't really want to invest with an operator that's going to have that same learning curve over here that you would have if you were an active operator, because it's very, very similar levels of risk if you are actually going through with an inexperienced operator that doesn't have that long-term experience investing in that particular asset class, right? In addition, you really got to focus on the game plan. What is the point of all of this in the first place? It's to cover your monthly expenses with cash flow. So how can you do that to the best of your ability, the fastest way possible, right? Is that going passive? Is that going active? And also, how do you actually keep up with inflation, right? It's not just your current income now, it's what's your income going to be in 5 years, or your expenses going to be in 5 years or 10 years from now with inflation that comes in, and is your income actively going to keep up with that, or is your income passively going to keep up with that? And how do you focus on getting that passive income to create more income than you need so you can continue to reinvest, keep up with inflation, and invest in assets that create enough cash flow to beat that inflation percentage that is continuing to come out, and invest in assets that will leverage that inflation, like investing in property that has debt on it. Inflation will decimate that debt. If you're investing in property, typically you're going to have an inflation hedge to a degree by investing in property where property values will rise over the long run. Anything could happen in the short run, but in the long run, they will definitely increase long-term in value as inflation continues to rear its head. And I personally think that's one thing that is here to stay with inflation. And so it's important to be able to preserve your wealth through some of these strategies at the same time as developing enough cash flow streams to actually retire off of from the cash flow standpoint versus the equity build standpoint, right? In addition, one of the biggest factors you should be considering when you are investing actively versus passively is, what is your risk tolerance? What kind of stress can you deal with? Because when you are investing actively, like I mentioned, you are solving problems all the time. I swear, I keep remembering, it seems like Mondays are the day when there's 12 problems to deal with before noon on a Monday, and you're just like, wow, did I just hit everything except for the kitchen sink today? And then you solve those problems, you keep moving forward. Can you let that emotionally fly off your shoulder? Or are you gonna freak out every time some little thing happens with a property? Every time a tenant doesn't pay, or there's a big repair that occurs, or something happens with the city, or a million other things that go wrong with properties. Are you the type of person that can deal with that? Or do you need someone else to manage those problems for you so that you don't have to do that? Because that's really what you're doing as an active operator. You're getting paid for that, but can you deal with that risk level in your life? Do you want that in your life? Is it worth it for those gains? So anytime you're looking at an active investment, you want to understand, is that stress, is that workload worth the gain versus if I just invested passively over here, what gains can I get? What I've found is many times it's not worth the extra workload involved for that extra return on investment. If you're looking at the incremental difference between the return on investment on a passive side versus active side. Actually, many times I see the passive side of things being much more lucrative even than the active side, especially when you're considering the labor costs involved there too. So, and you also want to understand, do you have enough resources to put this stuff together to be able to be an active operator and an active investor in the first place? There are definitely some benefits to doing so. You learn all of the risks and how to mitigate them the hard way, right? But because you've learned those risks, usually the problem resolution is a lot easier in the future because you're used to dealing with problems, right? Usually you're able to build wealth a little bit faster. This is why we flipped 1,000 houses, which was probably my biggest mistake in real estate, was actually selling this many houses, which is where I was saying I learned this the hard way, because I could have just raised capital instead of selling properties and marketing for sales. I could have marketed to raise capital and hold all those assets long term, which then massively increases my, my value there and my equity long term and my ability to really build wealth for myself and my family through holding those assets long term. So just wanted to give you an understanding, an idea for some of the things you should be considering when you are looking at being an active investor or a passive investor in real estate. I hope this helped add some value to you and help you determine which strategy is best for you and your life and what your plan for your life is. If you want to learn more about some of the strategies we implement, go to MathewOwens.com. That's MathewOwens.com. So MathewOwens.com, and I will see you on the other side. Thanks so much and talk to you soon. Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. 3 of the key pillars to becoming a successful real estate investor. Number 2, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number 3, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.